On April 24th, U.S. 10-year Treasury yields put in a 5-month high of 4.7%. But since that time, they collapsed to a low of 3.8% on August 2nd. The narrative seemed to change, though, in that first week of August as the focus shifted to two long-end bond auctions, which initially showed less demand. That was in the 10-year and the 30-year. However, 10-year Treasury yields had a quick recovery from 3.8% to almost 4%. What will be interesting now is seeing if the concern over recent weak auctions, which are likely related to increasing supply, can counterbalance the growing belief that inflation is tamed, which would make bonds more attractive to hold and could draw buyers back in, decreasing yields. Now, the futures market still says there's a 100% probability for a rate cut at the September 18th FOMC meeting, split almost equally between 25 and 50 basis points, and slightly more than 100 basis points easing priced in before the end of 2024, according to the CME FedWatch tool. Now, another lingering question remains: does the Fed react and change its course based on declining equity markets? This has been debated for decades, and many would suggest that it's not the Fed's job to protect asset prices. Although that's agreed upon, it does make sense to think that wealth destruction in equity markets could have an effect on aggregate demand within the economy and could push the Fed closer to easing. So markets will be watching the stocks to see if the 17% decline in the Nasdaq from July 11th through August 5th was just a small bump in the road or something more. If a trader believes the 10-year Treasury yields could move higher from here, they could express that by buying the August 10-year Treasury yield futures contract at 3.85 and targeting a move to the July 24th high of 4.30. Now, a stop for this trade could be placed below at 3.55. This trade can make $450 if the target is reached and risks $300 if you're stopped at your level. Now, if a trader believes yields could fall from here, they could sell the August 10-year Treasury yield futures contract at 3.85 and target a move to the 2023 lows of 3.32. Now, a stop for this trade could be placed above at 4.10. This trade can make $530 if the target is reached and risks $250 if you're stopped out of your level.